Maybe the market's selling off massively today, but why did it sell off? Why did the market sell off, and what is going on? Today, we're taking a look at the chart, and we're talking about, once again, the gap fill, my friends. The gap in the chart getting filled. It happens almost, I wouldn't say 90% of the time, but it's pretty common when we have a gap in the chart that gap is going to get filled at some point. It might not happen today, it might happen tomorrow, but at some point, if the price moves into that area where the gap is, there's a pretty good chance that it's going to get filled, and today was a perfect example of that. Going to break down the move here in the chart and talk more about how you can profit from those gap fills, baby. Let's go.
Yeah.
Well, what's going on, guys? Patrick here. If you're new to the channel, you haven't already hit that subscribe button, you'll learn more about day trading. Hit that subscribe button right now. Let's go. Also, we got a free Discord. There's a link down below. You can come join us talking about stocks and all that fun stuff. But let's get right into this action here and break down a couple charts. All right, we got the QQQ chart pulled up here. This is the NASDAQ, the SPY, the QQQ. Both had massive gaps in the chart today. So if you look here this morning, we gapped up to this 294 level. Remember, Friday we closed here, and then the market opened up on Sunday with futures pushing up there, gapping up, and then we had this gap in the chart, and that's what we're going to be focused on here, right? So we got this gap. So this is where we closed at on Friday, 92 level there, and then we'll have this area here being 294. So we have a gap in this chart, right? When I say a gap, basically the price action not really having a lot of price action during normal trading hours. One thing that I do suggest, if you're going to be trading options, you're going to be trading futures, you're going to be trading the overall market, things like that, what I like to do is only focus with at least my QQQ and SPY charts. I like to have it set so that I only see the price action during regular trading hours. So if you're using TradingView, which is what I'm using right here, the TradingView desktop app, there's a link down below to learn more about this app that I'm using, this platform. But in general, down here at the bottom, it'll say regular trading hours or extended trading hours. You can see what happens if you have the extended trading hours. You can still see that gap there, but then you have this pre-market action, which is kind of interesting because look at how we kind of held that 294 level there pre-market, and then finally we broke through that later on. But in general, you can see the difference between the normal electronic trading hours, extended trading hours, and the regular trading hours there on the chart. So giving a little bit difference in the overall kind of layout of the chart, but mostly, still very similar in the overall idea of it. But the focus here is the gap, right? We have this massive gap in the chart from the 294 level to the 292s. It's not, I guess it's really not that massive, but it's a gap, right? And what do we know about gaps? That gaps love to get filled. And as you can see here today, this is the 15-minute chart. We bounce off that 294 level. Everything was looking really good. Everything was looking really nice. And then we got a double top at this 296. This is actually where I got short at. If you watched the video today, I got short at this level and only took a small profit because I was thinking like, okay, we're going to bounce here and then make this next leg higher, kind of like this. Not really, I wasn't like super bearish on this because we were still above the VWAP. But here, when we broke above the VWAP, it changes a lot because now I'm thinking there's a good chance we break below the VWAP here that we can then pull back and break down here below this 294 level. So that 294 level was a key level. Let's say you're trading options on the Q, trading options on the SPY. Let's just say you're just trading in general, Apple, big tech stocks, and you get that break on the Qs below that 294 level here, well, then it's off to the races. And as you can see, very interesting because the price action basically shows you like this gap here is just like free falling. There's not a lot of price action. There's not a lot of volume in this area. Nobody like kind of really knows. I think also people are playing into the fact that they're thinking this is going to fill the gap as well. So they don't want to be buying. Like people aren't just like trying to load up at 293. People aren't trying to buy at 290.50. They're not trying to buy in this level because again, what do we know? That these gaps love to get filled. So here we have this big move down. You can see how the volume was kind of light through this area here. And then as soon as we broke through that 294 level, the volume comes in, sell. Everybody who got long up here is now selling, getting out. The shorts are piling in because the shorts are thinking, hey, this is going to fill the gap, right? The gap is going to get filled here. And guys, I try to talk about this like as much as possible because I think sometimes people, they think that like, oh, it's just too simple, right? Like, oh, the gap, the RSI, Patrick's 3-minute trends, the simple strategies that Patrick is talking about, they don't work. But here again today, look at this move. I mean, this is a massive move. So if you would have traded this, let's look at the 3-minute chart. If you would have traded the 3-minute chart, very simple, like we always talk about with this overall plan, you know, you have this, basically this trend off of the kind of low there, ding, ding, ding. We get back above the VWAP. There's a couple of long opportunities there as well. Once we couldn't break above the high of day, you can see what happens. The trend changes, we get stuck, and then we start to sell. And then at this point, you know, if you really wanted to wait, I guess you could have waited for the break below the VWAP there on the 3-minute chart, and then you get that sell through. Or if you were like, I'm really going to wait for 294 to break, you could have done that as well. But I think you would have been safe basically getting short up here at the 295, 296 level, and then getting that sell down there to 294. And then basically after that, you can see kind of bounced off that little bit of area support, and then finally just got cracked. And look how it was literally red, 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 sell, sell, sell. I mean, there was literally no reason to get covered until down here. I mean, you literally had like literally no reason to get covered until we were all the way down here, kind of after we filled that gap, and the price even went lower from there. I mean, you went all the way down there to 288.50, and you can see, I mean, it's literally just a waterfall of a move. So the gap getting filled, the price just moving right through that gap there. I mean, this is 3-minute candles, so I mean, within, you know, 30 minutes, basically just moving right through this area here, the gap, right? This whole area is just kind of free for all. Nobody really knows exactly what's going on in that area because it kind of gapped up. We don't have good price action. We don't have support. We don't have resistance. We just basically have this free air area. It's just like a free falling area where the price just moves right through there, and there aren't any buyers and sellers. I mean, I guess there's a lot of sellers coming through there, but in general, you get an idea. Like, there's just not any support. There's not really any reason for the price to bounce off this level. And then I guess, you know, really the price didn't bounce until about 291 level. So you had just an amazing opportunity here for a short based off of one simple strategy, based off of one simple idea, and that's trading the gap, right? The gap getting filled. If you were shorting, let's say you bought puts up here at the 296 level and you held through this level here, I mean, those puts are up 100, 200% today on that move. If you would have bought the, you know, 291, 292 puts, or even the 294 puts, thinking this is going to break through there, I mean, that was some good opportunity today to trade options and also to trade futures here. So if you guys want to learn more, you want to start trading with me, come on over. We got a free Discord as well. You can check it out, and I'll put a link down below. But like I said, this is the trading view charts that I'm using and pulling up here every day, kind of going through here and giving you guys basically just like an idea, like, look, the gap is real, right? The gap is real. There's no reason to fight the gap. Does it mean that, you know, we're always going to fill the gap 100% when we gap up? No, but it's something to keep in mind that these gaps love to get filled. You know, we could have went sideways a little bit more, and then maybe like on Wednesday or Thursday finally broke to the downside here, if that would have been the overall setup. But in general, those gaps, I'm always kind of looking at those gaps. We break below this 294 level, boom, we fill that gap, and the price action continuing to sell off and down there to almost, 288. So a huge move to the downside here, just a massive move to the downside. There it is, the gap fill. It's a strategy that a lot of people think it's like, oh, it's too simple, or this is like a, you know, I can't believe in this strategy because it just seems too simple. Like, oh, wow, there's a gap in the chart. I could just make money when that gap gets filled. But again, like, this is happening. We get a lot of these pushes up overnight. We get these gaps, and then the market opens, news comes out, and those gaps just get filled pretty quickly, especially in the market that we're in today. So always keep an eye out. If you're trading, you're long, you're short, keep an eye. If there's a gap in the chart, there is a good chance that if the price breaks to those levels, if it gets to that point where it can fill that gap, well, there's a pretty darn good chance that it's going to fill that gap. And as you can see today, it paid out beautifully for everybody that was looking for that gap fill. So if you're not looking for those gap fills, start looking for those gap fills, my friends. I'll talk to you guys later on.
Yeah.